Welcome to The Explainer, where we break down timeless wisdom into clear, actionable insights. Today, we're jumping into a big one, Benjamin Graham's masterpiece, The Intelligent Investor. Now, this isn't some get-rich-quick book about beating the market. Nope, it's about building a solid framework for success that can literally last you a lifetime.
Okay, let's just start with this idea from Graham himself, because it's huge. What he's saying is that the key to your financial success isn't some secret out there in the market, it's right inside your own head. The biggest hurdle isn't picking the perfect stock, it's learning to control the impulses that trip most people up.
So the big question is, how do you actually do that? How do you get out of your own way? Well, we're going to build a framework to do exactly that, using 3 core pillars from Graham's philosophy. And don't worry, this has nothing to do with complicated math. It's all about adopting a completely new way of thinking. But before we even get to those pillars, we have to really understand the problem. The core obstacle Graham saw wasn't that investing is hard. It's that we make it hard on ourselves. See, investing isn't about outsmarting other people. It's about conquering your own worst impulses. Think about it. Graham saw that most people are on this wild emotional roller coaster. They get caught up in the hype when the market's flying high, and they buy in a panic of excitement. And then, when things turn sour, they sell in a fit of fear. That is a guaranteed recipe for losing money. So, to get off that roller coaster, Graham gives us our first pillar. And this one is a fundamental mindset shift. It really redefines the entire game, and it forces you to answer one really simple question. Who are you, and what are you actually doing here? Graham draws a super clear line in the sand right here. An investment demands real, thorough analysis. You have to be confident your money is safe and that you'll get a decent return. Anything else? Well, that's not investing. That's just speculation. It's gambling on price movements. There's no gray area. So you've really got 2 paths you can go down. The investor is buying a piece of a real business. They act like an owner who cares about its long-term value. The speculator, they're just buying a ticker symbol, following the crowd, and hoping they can sell it to someone else for more tomorrow. Totally different games. And here's the thing. Graham says success here isn't about being a genius. It's not about having a sky-high IQ. It's about having the emotional discipline, the character, to stick with your plan and not let your feelings run the show. Okay, let's keep building on that. It's time for pillar number 2, and this one is all about how you handle the market's crazy wild mood swings. To help you manage all that fear and greed that market volatility kicks up, Graham came up with one of the most brilliant and powerful metaphors in all of finance. It's a tool designed to help you detach your emotions from the day-to-day noise. So here's the deal. Mr. Market is your business partner, but he's completely unstable. One day, he's on top of the world, offering you ridiculous prices. The next, he's in a total panic, begging you to take his shares for next to nothing. The most important thing to remember, you don't have to trade with him ever. You see, his moods are his problem, not yours. The intelligent investor actually learns to use his moods. You should be thrilled to buy from him when he's pessimistic and things are on sale. And maybe you think about selling to him when he's overly optimistic. But you never, ever let his panic become your panic. All right, this leads us to the final pillar. And honestly, this is Graham's ultimate defense. This is the single most important concept for protecting yourself from mistakes, from bad luck, from the future. This right here is the bedrock of intelligent investing. It's a simple but incredibly profound idea. You must never, ever overpay, no matter how great an investment seems. You're not trying to buy great companies. You're trying to buy companies at a great price. This chart makes the concept perfectly clear. That gap between the price you pay and what the business is actually worth, that's your cushion. That's your buffer against things going wrong. And trust me, things will go wrong. The bigger that gap, the safer you are. And this is exactly why that margin of safety is so crucial. Its main job is to make big losses survivable. You know, the first rule of investing is don't lose money, and the second rule is don't forget the first rule. Well, a big margin of safety is how you follow those rules. So when you put it all together, these 3 pillars form a complete framework for how to behave as an investor. It's not about trying to predict the future. It's about building a system that's strong enough to withstand it, whatever it throws at you. And ultimately, Graham's entire philosophy really just boils down to this one idea. The game is about mastering your own behavior. The market is going to do what the market's going to do. Your success or failure, that's determined by your discipline, your patience, and your character. So the secret to all this, it's already inside you. You can develop the discipline and the courage to refuse to let other people's mood swings dictate your financial future. Graham gives you the tools. The real question is, do you have the temperament to actually use them?